Did you know that your credit score can cost or save you thousands of dollars on your house purchase? Yep, you heard it right. Your credit score is the key to everything. In this video, I'm going to break out what credit score is best to buy a house depending on your loan type. The most common are conventional FHA, VA, and USDA, and what you might be able to do about it in the short term to make sure that your score is up so that you can possibly save thousands of dollars on that interest rate. Whether you're a first-time buyer or buying your second, third, or 10th home, this information is going to be useful to understand how to navigate the system and avoid mistakes later on. So your credit score is a 3-digit number that's computed by the bureaus. So the bureaus, Equifax, Experian, and TransUnion, report data every month. And then depending on where you're getting your credit score, did you know that there's over 36 credit scoring models? So depending on where you're going to get credit, like if you're coming to get a mortgage, our formula that's used is different than anything that you're seeing on your bank app, or you're this or you're that. It's different. So I'm going to be talking about mortgage today, but it can apply to other areas. So commonly, the most common range is 350 to 850 for your credit score. Now, I'm going to talk about the tiers and kind of what's good, bad, excellent, etc. And then we're going to dive in to individual loan programs. So excellent, we find that the better interest rates are anything from 760 and above. Now, below that is another tier. Think of the credit scoring system as having tiers, and lenders have benefits or deficits every 20 points. So as you go down below 760, it becomes pretty crucial because that really could start to affect your interest rate. No matter how much you put down, whether you're putting a low down payment or a high down payment, the interest rate is still affected. So if your score is 720 to 759, you're still going to get a great rate, but you might be a little bit lower than the score that's 760 and above, okay? So 720 on at least the conventional loan type that we're going to go over in a minute, 720 and below is actually starting to get in that average, below average range. So if you're looking to where you should have your score, if it was me, I would definitely always strive to be like above 740. That's actually a really good range to be. If you find yourself below 700, in the 600s, not to worry, there's still loan programs that are available for you, okay? So not a bad score, it just means that it needs some improvement. Now, if you're below a 600, that's where some of the real fancy footwork comes in, and we're going to talk about how to navigate that here in just a second. Here's the good news. You don't need a perfect 800 plus score to buy a house. There are solutions for everybody, so let's get to it. Oh, hey, and if you're having struggles with your credit score, anything, comment. I'd love to hear. I answer quickly, and it also helps me know that I need to make another video about it. So let's hear. Okay, the first loans that we're going to go over are the ones that are the most lenient with credit. So that is FHA. That stands for Federal Housing Administration. Now, FHA loans will actually go down to as low as 500. However, and there's a big however, there's very few lenders that will do that. If your score is between 500 and 580, expect that you need to put at least 10% down, more than likely, and your interest rate's going to be a little elevated. So there are strings attached. You also need to make sure that you're able to verify 12 months rent history. That is mandatory. We need to know that you're paying your rent on time. So we're going to ask for canceled checks, proof of payment. So hopefully you don't pay cash for your rent because we can't verify cash. So when you pay your rent every month, make sure it's in some verifiable source in case you're ever asked later on. Pro tip. Now, if you're above 580, you can put down as little as 3.5%. The Mecca, the best score range to be in for FHA, where you're not really, dinged on the rate and it's the best, is above 640. Now, FHA, when you're between 640 and even 800, like perfect score, your interest rate is actually the same. So the one thing about FHA that I wish was different is that for the higher credit scores, they don't have any benefit. But there you have it. This is how it is. I'm just here to deliver the message and teach you how to navigate the system. So now we're going to go to conventional loans. Conventional loans are one of the other sweethearts of loans in addition to FHA. So FHA and conventional loans make up the largest percentage of loans in the U.S. Conventional loans, minimum credit score is 620. One thing you need to know about conventional loans is they are harder to qualify for. And unlike FHA, they are very sensitive to the changes in credit score, as I mentioned, 20 points. So lenders view the credit score as related to the pricing of the loan in what I like to call buckets of 20. So 620, 640, 660, all the way up to 850, which is the highest credit score, which I've never seen, by the way. So on conventional loans, the minimum absolute score is 620. Now, if you're putting less than a 20% down payment, you want to make sure you have above a 640. However, this is what you need to know. You will get a higher rate and higher PMI the lower to 640 that you are. So for conventional loans, the best scenario is that if you are above 700, and it goes up from there. If you're in the 600s on conventional loans, yes, you can more than likely get a loan, but it is going to cost you a little bit more. And that's where we sometimes look to FHA to try to subsidize and see what's best. You know, most lenders will just show you side by side and ask them to show you side by side the differences so you can make an informed decision. So just to repeat, conventional loans will go all the way down to 620. There are no exceptions to that. Okay, the next type of loan we're going to go through is VA loans. These are for our veterans. So if you've ever been in the armed forces or in the military, if you're a surviving spouse, if your military husband or wife has passed away, you might be entitled to survivor benefits. So VA does not actually have a published credit score minimum. However, most lenders are going to have a minimum of their own, which is 580 to 620. This is where a lot of lenders differ, and it's up to the different lenders to make their different decisions on what type of credit they want in their mix of loans. So I've seen some for 580, I've seen some for 620, so make sure you ask that question. The cool thing about VA loans is no down payment is required. Now, you can put a down payment, and there's no PMI. There is, however, a funding fee. So I'll put some of my VA loan resources down to where if you want to watch later about how funding fees are calculated, etc. But if you're a veteran, you definitely want to look into VA benefits on your loan, no matter how much you're putting down, because it could be the right loan for you. The last loan that we'll go over is a USDA loan. This stands for U.S. Department of Agriculture, and these loans are 0% down. They're also a little bit stringent on not only the credit score, but also the income that is required. Now, I'm not going to go through all of USDA loan requirements. You have to watch my video about it, which you guessed it. I'll put it down in the description. But USDA loans, most lenders are going to put the limit for USDA between 620 and 640. Now, this is for a USDA guaranteed loan. There is a type of loan through USDA called a USDA 502 direct loan. You have to go directly to USDA for that. No lender can help you with that loan, and they're a lot more lenient on credit. So if you have sub 600 credit, if you have what's considered to be very, very low income, you want to watch my video about that. You guessed it. I'll put it down in the description. But for the most part, the USDA guaranteed loan, most lenders are going to be 620 or 640 for that credit score. Now, on this type of loan, you want to also make sure that your debt to income ratio is probably below 42, 43% because they're not going to let you go over that and get a USDA loan. You also have to be in the right area for USDA. So again, check out my video about USDA. So there you have it, the 4 main loan types and what credit scores are required. If your credit score is not where it needs to be based on what we just talked about, don't panic. Here's a few simple tips to get your credit score up fast in order to apply for the mortgage. And you don't necessarily have to have your credit score there before you apply. A good lender is going to help you navigate the system and see where there might be some improvements needed for your score. So the quickest way to get your score up is to pay attention to those credit card balances. 30% utilization of balance to high credit ratio is ideal. Also, 2 to 3 credit cards max. Close those other cards. Regardless of what you've heard, it does not hurt you to close credit cards. 2 to 3 is the best number of credit cards. The other thing is to look for inaccuracies. If you have collections, you want to watch our video on how to delete collections, get them deleted from your credit report forever. It is possible, but takes a little bit of work. Collections are also a big booster of your score. You also want to make sure you pay things on time, set your payments to auto payment so that there's not a chance that it's going to be late. If you've moved addresses recently, make sure you're checking your mail so that you don't have any leftover utility bills or things that could report to collection later on that might be straggling that you don't know about that you have to pay. You also want to avoid opening new credit accounts. New credit is a damper on your score, so lay low. Keep the credit you have, close unused accounts or dormant ones that you don't need anymore, and pay attention to those credit card balances, and I promise you, your credit score will start to come up. Keep tuning in. Every week I release a new video. I want to hear your comments, any questions you have. See you next time.